Hi everyone and welcome to the weekly update with me, Richard Perry, markets analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, moving into this week, we've certainly had these equity markets under considerable pressure. Financial markets pretty much across the board have come under certain amount of strain through this flight to safety that we've seen. Investors are becoming increasingly worried about global growth and also some of the other factors such as Ebola and also protests in Hong Kong, other geopolitical shocks around the world, ISIS, Ukraine, etc. So this is all coming together, and last week we had a huge sell-off on these markets. Now, how is this impacting on volatility? Huge increase actually in the VIX, 37% up in the VIX volatility index of S&P 500 options in the last 2 days. Now that certainly suggests that fund managers are starting to considerably looking at getting some sort of downside protection for their portfolios. Now, these VIX, the VIX volatility index is now up at levels not seen since certainly earlier in the year, February. But also, interestingly, I've looked at the VIX in conjunction with the S&P 500, and every time the VIX has come up to this sort of level over the past couple of years and then started to fall, it's been consistent with key lows in the S&P 500. So it could suggest that maybe we're not a million miles away from a bit of a low in the markets. Now, also we've got earnings season that's cracking up into the States now. We've got the big banks throughout this week. And you've got the likes of JP Morgan, Goldman Sachs and Morgan Stanley all reporting this week, in the market will be certainly looking out for how their revenue lines, how their performances are going to be gauging, and we could get a bit of an indication as to how earnings season in the States is going to be turning out. So big expectations on these banks this week. So across the board, in terms of Forex markets, there's been a bit of a dollar consolidation, bit of a mixed performance in the last couple of weeks, really. The euro dollar, for example, it's picked up off the kilo around 125, formed a little bit of a base pattern, but that base pattern has been called into question in the last couple of days by a bit of a correction. Back towards 126, rebounded in the last day or so, and it's now back towards 127. It's sort of playing around these levels. It needs to break above 128 to consider the recovery in the euro to be continuing. Other than that, I think the euro is in a little bit of a state of uncertainty, not really sure exactly which way to go. Now, into sterling dollar or cable. The reaction, I don't believe, is as strong on cable. It's still in this big 12-week downtrend. It still just looks like it's recovering for a chance to sell. Certainly the $1.6226 key high is now in place. That's come under $1.6280, which is the big, I believe, the big near-term resistance. And I think it looks like it's going to be just breaking back down towards a retest of that support around maybe $1.60 and then back towards $1.5941. Now, I think that the interesting Forex pair at the moment is dollar yen. Dollar yen had been consolidating even before the dollar index started to fall over. Dollar yen's broken below the 108 big figure support, and that now sort of completes arguably a little top pattern that actually gives us an implied target of 106. Now, I don't believe that necessarily dollar yen is going to get there, because I think this whole dollar correction that we've got going on is just a recovery, a correction that will be bought into ultimately on the dollar. But certainly dollar yen is into this support band between 106.80 to 107.40, and quite how it reacts within this support band could even give you a nice little medium-term buy signal. So certainly one to watch there on dollar yen, and it certainly has been helped by this flight to safe haven assets. Onto indices. Well, the markets, as I said earlier, have been significantly impacted by this flight to safety out of risk assets such as equities, and that has certainly been shown through on this VIX volatility. Now, as I said, watch out for this VIX index this week. If it starts to come off, maybe that will be a signal for a key low in the markets. Also, watch out for the bank's earnings. They could also just take attention away from the market fears of global growth and sort of put towards earnings season in the States, which hopefully will be more supportive for these markets. So the S&P 500 needs to find support around that 1900 level. That is a key level. That was the low from August, and the problem that I suppose you have near term is that you have got a breakdown of that of a major primary uptrend on the S&P 500, and that 1900 support needs to hold, I think, near term to just maintain any sort of notion of a positive outlook for the S&P 500. The DAX is under pressure though. The DAX is broken down below 8903, which was the key support. That takes it to a 12-month low. Now, I'm not going to be calling a big top pattern on the DAX yet, purely because I think the DAX is massively oversold, and I think that it's due a bit of a rebound. In fact, even today, we're seeing, well, we saw a big open on the downside today, but a reaction, and the DAX is currently trading higher. So exactly where the DAX closes today could be pivotal as to exactly how we see the DAX moving forward. Now, I think once the DAX unwinds some of this oversold momentum and just reassesses its position overall, I think then we can get a proper gauge as to how the bulls and the bears are sitting. But at the moment, certainly the DAX is oversold and needs to just have a bit of an unwind. Similar sort of story on FTSE, although not so bearish. On the long-term chart, still stop it in that big sideways trading band on the FTSE. Now the FTSE again is looking to form a bit of support. 64.46 is the resistance on the upside it needs to break through to really start to improve a little bit, but it could be a little bit of a support coming in. Again, oversold on the RSI, so watch for a bit of a rebound. So both these key European indices are interesting in my opinion. Okay, so on to gold. Gold has been one of the chief asset classes that has benefited from the safe haven trade, and also the fact that the dollar has started to consolidate. Two reasons why gold has been pushing higher from that 1183.50 support. Now it's rallied over $50 in the past week, and it needs to now really have a good test of that $1,240.60 resistance. Now that is the key low that came in from June 2014 this year. And it needs to now, that support becomes the resistance and is the medium term level it needs to break out through. So this is the test that we've got going on this week. Okay, so what else are we looking out for this week? Well, you've got Columbus Day in the States, so nothing really going on this afternoon, but into Tuesday you've got the UK inflation rate, and that will also be interesting with in line with UK unemployment on Wednesday, because we're looking out for the UK inflation and the UK wage growth. If UK inflation continues to fall away, then the expectation of a rate hike in the UK will continue to fall away too. Similarly with wage growth, if there's no wage growth, the chances of getting a rate hike also recede. So two key indicators this week which could have a big impact on sterling. We've also got the German ZEW economic sentiment indicator, which has been falling throughout 2014, and one of the reasons why the market has been under such pressure in Germany. Now, the German ZEW has been a very good indicator as for German GDP, so that's why the market is very interested as to how the economic sentiment indicator has been going. Okay, so on Thursday we've also got the Chinese inflation data, and then on Friday we're looking out for the housing data out the US. Now that housing data is key because it was very strong last month. Certainly the housing starts and the building permits, very positive indicator for the US, and it was very strong, supportive of the market last month. So watch out for that on Friday. And then we finish off with the University of Michigan consumer sentiment as well. So a bit of US data to finish off the week. So I wish you good luck in your trading throughout the week, and I will speak to you next week. Thank you.